guys, my name is Himashri. I'm studying in second year BCA of St. Francis de Sales College. I'm here to explain about the topic of petty cash book. In petty cash book, we will know the definition of petty cash book, advantages of petty cash book, problems on petty cash book, and types of petty cash book. Petty cash book. This is the definition of cash book. A petty cash book is just another kind of cash book that records petty cash transactions and also small recurring payments. For example, everyday expenses for food, conveyance, stationery, ink for printers, postage, etc. So instead of recording all such transactions in the same cash book, we record them separately, that is known as petty cash book. Petty cash is an account that records all the petty cash expenses in chronological and systematic order. The petty cashier is responsible for updating and maintaining the petty cash book. So this is the definition of petty cash book, and the next is advantages of petty cash book. All petty expenses are maintained separately. So this system is more systematic and easier for auditing as well for the cashier. Petty cash books will allow us to easily compare and efficiently control petty expenses. Recording all of these transactions in the cash book can get to be very tedious and cumbersome. And so, this responsibility is divided between the cashiers. This division of work makes them, both the cashiers, more efficient. This makes the cash book less voluminous and more informative and clean. So, the advantages of this is, for the cashier, it will be very easy to maintain. And the next is, there are three types of petty cash book. First one is fixed petty cash book. Second one is impress system of petty cash book. Third one is analytical petty cash book. Among these three, now I'll be explaining about the analytical petty cash book. Other than the normal petty cash book, which resembles a normal cash book, there are two other types of petty cash books. One such type is the analytical petty cash book. In such a cash book, there are pre-existing columns for the unusual expenses that require quite frequently for an organization. So, if an organization has daily expenses for food, stationery, postage, etc., these will be individual columns in the petty cash book. And the advantages of this analytical system is that it saves time, and also it will be enable the accountant or the management to analyze the expenses under the different various heads. This makes comparison easier as well. So this analytical petty cash book will be useful for time saving, and also it will be very useful for the auditor to make it easy. Format of analytical petty cash book. Amount received. The amount whatever we received from the bank or the organization. Cash book folio. Date. Particulars. Voucher number. Ledger folio. Total payment for what we are making the expenses, that one. And the analysis of expenses. Each column will be divided into individuals, that is printing and stationery, postage, traveling expenses, entertainment expenses, personal account. This will be according to the transactions. So in this, we will be presently not using the cash book folio, voucher number, ledger folio. So now I'll be explaining the problem on analytical petty cash book. So the first one is Jan 1st received from bank has impressed cash balance ₹1000. So to make payments, we are receiving amount from bank. So that will be Jan 1st to cash, and the amount received is 1000. And the second one is Jan 7th bought postage stamps ₹200. That means we have to make payment for postage. So it will be by postage. The date is Jan 7th by postage, and the amount is 200, and in postage column also it is 200. And the next one is Jan 10th paid for stationery ₹290. So we are making payment for stationery. So the date is Jan 10th by stationery, and the amount is 290, and also in stationery column also it is 290. And the next one is paid for cartage. Date is Jan 15th, paid for cartage rupees 40. Cartage is nothing but it is a type of transportation. So Jan 15th by cartage and the amount is 40 rupees. So we have to write it in our traveling expenses. And the next one is Jan 20th, paid for taxi hire rupees 50. This also comes under the traveling expenses. So Jan 20 by taxi hire rupees 50. Rupees 50 under traveling expenses. And the next one is Jan 22, paid tips to office peon rupees 90. Jan 22 by office peon. This comes under entertainment expenses because we are paying for him as a entertainment expenses. So it will be 90 rupees. Under entertainment expenses, it is 90 rupees. And the next one is Jan 23rd, paid to X against his account rupees 130. It means we are paying amount for him, but in future he has to again pay for us, so it will be against. So Jan 23rd by X account and the amount is 130. So this becomes a personal account. And the next one is Jan 27th, paid for stationery purchase rupees 100. Jan 27th, again it is a stationery. By stationery it is 100. And the last one is Jan 31st, paid for tea to travel agent. This also comes under traveling expenses. So Jan 31 by travel agent, and the amount is 30 rupees. 30 rupees. So we have to calculate all these expenses for what we made for. So totally it will be, so the total payment that we made in analytical petty cash book is 200, 290 plus 40 plus 50 plus 90 plus 130 and 100 and 30 equals 930. So the total payment that we made from 1000 is 930. So from 1000 we have already spent 930, so the remaining amount will be 70. So 930 is the payments and 70 will be remaining. So this 70 will be carried forward for the next month, that is Feb 1st, 70 rupees. So as a total payments we got 930, and from that remaining 70 we got, so that will be carried forward for the next month. So in this individual columns, let us see, 230 plus 100 is 390, and in postage column 200. So here it is 200, and traveling expenses 40 plus 50 is 90, and 90 plus 30 is 120, and entertainment expenses is 90, and down also it is 90, and personal account it is 130, and it is 130. So this all including payments, it will be 930. Thank you. Thank you guys for paying attention and listening to my video.